Hello, good morning, good afternoon, and good evening, depending on where you're joining us. Welcome to the iThrive FS live forex trading and analysis. It's been a week that's going to be very eventful. Yeah, I'm getting some feedback from the studios just for a minute. It's going to be very eventful, and we're expecting so much price volatility this week because of several macroeconomic data that will be released throughout the week. This week, we're expecting to have the inflation data on Wednesday, US inflation data, consumer price index, and later on in the week, there will also be producers, managers, index. Also, those are data for for inflation. And it's very important that as a market a forex trader, you have an understanding of what drives the market. Very important. You have an understanding of what drives the market. What are the market drivers? All right, if you're coming here for the first time, we'd like you to click that like button and share this video with your friends so that we can make this content more available to every other person. During the duration of this meeting today, we give you opportunity to ask your questions as we give an expose or outlook on some currency pairs, what we are thinking, our expectations this week based on technical and of course fundamental, information. And I said, as a forex trader, it's very important. It's very, very important you understand what drives the market. All right. What are the things that drive the market? There are currencies that drive other currencies. There are some commodities that are being driven by some major currencies. And one of those currencies that control the various prices of other currency pairs is the US dollar. You must have an understanding of what drives the US dollar. If the US dollar is strengthening, how does it affect some currency pairs? If the US dollar is weakened, how does this also affect some commodities like oil, gold, and all of that? It's important to know what drives the market. Today we'll also be looking at the DSY, that's the dollar strength index, and also the US 10-year bond yield, and also explain a little how these indices affect the price and of many other currency pairs. I'm going to share my screen right away so that we can move into this whole thing today. All right, it's going to be very exciting as we identify some tradable opportunities. We're going to go straight to trade to make a call or give you an outlook on how they are trading. Again, I also have to tell you that as a forex trader, an understanding of top-down analysis is very important. How you can scale from higher time frames to lower time frames, to identify trends and then see some, trading opportunities that you can trade. It's important you know where the market is trending and also have a background knowledge of what is causing that trend. With that said, you will be looking for trading opportunities just in the direction of the trend. You can make trading very simple and exciting if you follow just these simple, rules. This is the US dollar index. I'm going to move straight to the weekly time frame so that we can know what actually is, the US dollar index is a combination of different currencies right inside there, the euro, pound, and also the dollar. Okay, so it makes up the US dollar index. So this particular index, if it moves up, okay, if it increases, it causes some currency pairs to drop, and if it weakens, it causes some currency pairs to increase. For instance, if the dollar index DSY strengthens, okay, moves up, it will cause GBP USD to drop, okay, Euro USD to drop, AUD USD to drop. Sometimes it can also affect gold, but not all the time. The major thing that affects gold is the US bond yield, particularly the 10-year US bond yield, okay, because they are inversely related. The dollar index DSY is inversely, related with the GBP USD, the Euro USD, and AUD USD. Any other NZD USD, those currencies that has the dollar, right, as one of the denominators. Okay, then it controls gold to an extent, but not all the time. The major thing that controls gold, okay, is the bond yield for the US. And DSY, the dollar strength index, and the bond yield, sometimes they are proportionately related, directly related. So if one is going up, the other one will also go up. If the other one is coming down, this other one will come down. But in some cases, there are some cases we have seen that the dollar strength index can be, going north, while the 10-year US bond yield can, be going down. So sometimes they just move in the same direction. Most of the times they move in the same direction, but there are some times that they move in opposite directions. I'm giving this background so that you can know. You don't just analyze the market in isolation. There are a lot of things you have to consider. Okay, as a forex trader, I like to know what is driving. After I've seen a very good tradable opportunity on the charts, I will also want to know what are the fundamental buyers. If they agree, then I call that a high probability trade. You can see how this is the weekly time frame. Okay, I think this is all-time high. Let me move it to the monthly time frame. Yeah, it seems okay. No, not there. Here is all-time high. I can just put a line there for the dollar index. Okay, I can just put a line here. Okay, that's not all-time high. This is all-time high here. Wow. 163. There was a time dollar index was 163, and that was 1984, February 19. Okay, March 1985. That was when this happened. Amazing. Amazing. All-time high. All right. This is another high here. Okay. Okay. And price nearly went back to this high, but it just made a peak here. So we can say with all these peaks we are seeing, this is a high, this is a lower high, this is another lower high. It suggests to us from this monthly time frame that the dollar strength index, the DSY, is overall on a downward trend. Another thing that moves up is more or less like a correction, as far as the monthly and weekly time frame is concerned. Okay, so this is it on the weekly time frame. Okay, we can identify some levels here around this area. Okay, this is a key level. There's a key level here. There's a key level here. Okay, level of resistance that became support here, support. All right, so let's scale down to daily. We'll be looking for some patterns, okay, and then make use of trend lines. So we can have an idea of what is happening in the short term. This is this, so we can do a trend line. Okay, I think this is fine. All right, and then there is a support zone here on the DSY. I like doing all this little routine, so I can see the price is making higher highs and higher lows, higher highs and higher lows as is coming all the way down. Let me remove this. It's coming all the way down from up here. You can see down, up. So when price makes a move, sharp move, we call it an impulse, and then followed by a correction. Move, then correction, move. This is an impulse, and then this a correction. Okay. All right. So we can see that the overall direction is where bearish. So any drastic, sharp drop in price in the bearish direction is referred as an impulse. Okay. So let's looking at this now. We can call here. All of this is a correction, and then this is an impulse. Here is an impulse. So we can call this an impulse here. So this is our impulse, and all of these correction. Let me remove this. All of these correction, and so this is correction. So we're expecting to have another impulse in the bearish direction because the overall trend is bearish. This will give us an idea. Okay, if you're trading, if you're a position trader, swing trader, to give you an idea on where to leave your trades. Okay, and I like using Fibonacci retracement tool a lot of times to gauge where we are. Okay, you can see this impulse that corrected with this double bottom here, kind of double bottom that corrected, it entered into our killer zone. Our killer zone of 61% to 50% retracement zone. Price pushed into that zone, made a high, and came back there to make another high. The neckline was broken here and it started coming down. So we may see the DSY. I'm seeing DSY in the short term. Of course, overall is bearish. Here, what we are seeing, we're seeing an impulse here. So there will be impulses and then corrections. There's an impulse here. Okay, maybe markets will correct back to this zone and then before it starts to come down. So you can even use your Fibonacci tool to know where it can get to, most likely get to. Remember, the Fibonacci tool does not start and end on 50% to 61.8%. We also have 23.6. We also have 38.2% before the 50. So it can get to those zones before, you can, before markets can't continue to go. But if the tempo is so high, okay, there's a lot of bets in the bearish direction. Okay, markets might not really get to 38. Around this place is, I think it has gotten to around 23.6, which is here, and coming down, can get back to this point and come down if there is a deeper retracement around here before it comes down. But remember, what we are looking at is price pushing in the bearish direction. So there's a whole lot of support here, okay, for price to break before we can have this steady. So this in mind, I'll be looking forward to. Remember, the DSY is inversely correlated with GBP USD, Euro USD, AUD USD, and NZD USD. If the bearish stance of the dollar strength continues, if this bearish stance continues, it gives us an idea of the direction to trade on GBP USD, all right? And to an extent, even gold, okay? To an extent, even gold. So this where we are looking at, and this can give us this ABC wave pattern here overall. Okay. I'm going to remove this and this and this. So if you can have the ABC Elliott wave, the ABC Elliott wave from here down to this point, which retraced by 61.8, between 50 and 1.8%, and then coming down here. Okay, we have to check because this C must be the same length with this move. So this is an impulse followed by correction and then an overall, impulse, bearish impulse that will follow. Okay, the distance from here to here should be the same distance from B to C. If that said, let me use this to get, okay, so I'm going to clone this, get it from here all the way down. So we're looking at this point, we're looking at this level, and I think there's a line even there is actually a support line. The support there, the support there. Okay, so we'll take these arrows out as a monitor. So we have to be watching this. Okay, so if you are selling GPUSD, just know USD for short-term bearish bias. Okay, at least the correction of what happened on Friday. Okay, so that correction of that long bullish, run on gold, on Euro USD, GP USD might experience some kind of retracement today ahead of the big macro data that we are expecting. And some of the time, you see, it's so interesting. Most, what the chart is showing us aligns with the macroeconomics. Okay, we're expecting US inflation data to be released, on Wednesday. Okay, that's the CPI, Consumer Price Index, that's due on Wednesday. And then we're also having the core PPI, okay, Producer Price Index. All these are the measure of the inflation in the US economy. All right. So what is the Fed going to do? Fed is going to make some decisions. This is one of the tools they use to this is one of the indicators that they use to measure how healthy that the economy is. So if the price, if the US inflation data goes so high above the threshold, what happens is that the Fed will set into corridors. Inflation is not that very good. No, we have good inflation, but what we are having now is bad inflation. It's gone so far away from the threshold. Okay, so the Fed is expected to do what? To cut interest rates, or to pause at least. They've paused first time in June, so it's expected that they are going to pause. It's an expectation that they are going to pause if the inflation data remains cool. But if the inflation data on Wednesday still goes above expectation, the next rate hike, the next FOMC meeting, where Fed would decide whether to hike interest rates or to cut or pause, that decision will be taken. All right. So also this week, we're expecting the UK GDP data. These are very high movers, drivers of the economy, and you have to pay close attention on the days that they're going to be released, and this will determine the overall direction of the market. And also this week, I think that's on Wednesday, we're going to be seeing rate decision by the Reserve Bank of New Zealand and also the Bank of Canada. The Bank of Canada last time the hiked interest rates above the expectation because their inflation figures are beginning to come down, but they still hiked interest rates. So they are going to take a decision. This morning I was looking at the figure for the Bank of Canada. Their CPI news was on 27th. Yes, CPI news was taken on 27th of June here, and the price came lower than expected, and it was now expectations. Everybody was thinking, the last Bank of Canada interest rate decision, we all expected that they're at least going to pause, but they went ahead to hike interest rates. So what happens this time around? What's going to happen this time around will decide the direction that maybe pairs like Euro card and GBP card, the direction that they will take. If they hike interest rates, the Canadian dollar will going to strengthen, and if they pause, there will be a weakness, slightly weakness, and if they cut, the Canadian dollar will just collapse. All right, so it's important you put all these things in perspective as you trade this week. Another market determinant, most currency pair determinant, is the US 10-year bond yield. Let me get that. US 10-year bond yield. This is it. So let's go to the weekly time frame for this. Weekly time frame. Okay, you can see the bond yield has been in a bullish trend since June 2020. It's been on a bullish trend. You can see how the market is making higher highs and higher lows. Okay, higher highs and higher lows like that. Okay, I saw something here. It's a very deep correction. If you can, right? It's a deep correction that got broken here, but market price is at a resistance level. currently at a resistance level. I'm expecting some kind of correction of these. There's a lot of imbalance here. All right, there's an imbalance here. Market may come back to close, get this inefficiency zone, can retrace back to this inefficiency zone and give us some opportunities to trade again. So let's look at it for the lower time frame. Okay, this is a weekly. All right, I said there's some kind of is on a zone. Okay, right now on the daily time frame, and we can see this ABC correction here. You can see the ABC correction that pushed down here, and markets actually is expected to push, down. So you can use your Fibonacci retracement to look. Why are you looking at this? You may not trade this on your. If you have good accounts, you can also trade it directly, but it determines mostly the direction that gold will go. So if you're a gold trader, this is what you should be watching most of the times and understand what drives this US 10-year bond yield. If you can use technical means, we have another level here, okay? But there's some reactions right here. And that reaction is as a result of this very strong bullish impulse that happened here. This is an ABC wave, Elliott wave that needs to be corrected on the daily time frame. On the daily time frame, can we move to 4 hours and get more details? Okay, good. All right, on the 4 hours here, we are seeing much of those corrections. This is the last bullish move, and it was immediately countered by the bears and made a high here. And since then, there's not been much highs. We've been having just price beginning to weaken. This is a high here. All right, and then you have another high somewhere here, and it's not been broken. So you can see how the markets got here weakened, and then there's another high somewhere here. Let's go this candle here. Let's go this candle here. You can see this. So all this supporting the correction that is expected to happen. And how are you going to trade? Let me use Fibonacci from this low to the high. So if this correction comes through, price moved into this zone, the previous high, and if it comes through into this zone and it's expected to now move back to the higher to retest that other high, if it comes here, there'll be some reactions, and then it needs to move back up to this higher zone. Okay, so if this happens, which is what you're going to be watching to know, because there are some patterns that will be showed on these indicators. I call this an indicator pair, all right? An indicator instrument, something you can use to determine what happens in the pairs that you are trading. We've done DSY. DSY will give you an indication of whether to buy or sell any of those USD pairs. But this in particular, the US 10-year bond yield, use this particularly to know the direction to trade gold. Excuse me. To know the direction to trade gold, okay? And we're expecting some kind of corrections, bearish correction into this zone. So, and we said that this US 10-year bond yield is inversely correlated with gold. So if this bearish move is going to come all the way down, what will happen to gold is that gold will go back up. Gold will go back up. Gold will go back up. So we're now going to move into the currency pairs, maybe beginning with gold. Let's look at what is happening in that particular scenario. Except this does not break this zone where the price is, does not break these levels of levels. Markets created some liquidities around here. There are some liquidities in this area. Excuse me. Let me take this Fibonacci tool out. Okay. There are some, you can see these shadows, candle shadows here. Those are some liquidities that main market price before it goes back up. It may come back into this zone, okay, to pick up, strip some liquidity, grab more liquidity from here, and begins to go up. But if that doesn't happen, and we see this come all the way down, okay, we might experience gold to go back bullish. Okay, remember all these are speculative, and this is already happening in the gold markets here. As we can see, this is the 4-hour time frame for gold. 4-hour time frame for gold. We have done top-down analysis on gold quite a lot of times, and we made a call here. We saw some yeah, we did make a call here last week on gold. Okay, let me move all this stuff. You can agree with me. You can see um, an inverse head and shoulder pattern around here. This is the shoulder. Now you can see the head here. Okay, you can see the head somewhere here. And followed by the right shoulder. Okay. Followed by the right shoulder here. Gold markets had been, moving down, and of course, the uptrend on the weekly time frame for gold had been broken. Yeah, on the weekly time frame. I said I was not going to go into this again, but let's do that for you. You can see this trend line on the weekly time frame. Markets have been bullish. Okay, from here, made this high, making higher lows. If you push it on daily time frame, you can see more details. Okay, it's important to do your top-down analysis. You can see did a triple bottom here and pushed, corrected into the trend line with a double bottom and pushed back up, and then give us back price moved back to the all-time high on on the gold, which is about 28.5. Okay, and you can see this pin bar sign of rejection, bullish rejection, and ever since then price have been correcting downwards. And some time ago the trend line got broken. Okay, it got broken from here all the way down. It's a huge bearish market from here all the way down to this point, about 1,800 pips so far. Okay, so I just wanted to show you this picture. Now, if we move back to the 4-hour time frame where we're trying to look at this gold, okay, you can see this. You can see this, the inverse inverted head and shoulder. Price moved all the way down here. Okay, pushed up, made a low, then went back and couldn't make a lower low. You're supposed to make a lower low. This was the failed arm, the failed shoulder. All right, this is a failed shoulder. Okay, so if we go back to the US 10-year bond yield, you can see we're expecting a correction. We're expecting the market to drop, expecting it to drop because it has gone so high. The US 10-year yield. This is what we're expecting this move down, and this move down will cause gold to go back up. That's what is happening right now on gold. You can see the gold is pulling up. All right, I did this short-term trend line here. Of course, there are some areas of liquidities on this zone. Okay, so you can see price is making that move. All right. Price making that move, and see that on the gold. So what I'm saying, gold might go back to retest this level. Yes, gold might go back to retest this level here. So we have 1937 to watch again. Okay, we have 1937 to watch again. This is a very strong rejection. You can see this week here. Very strong rejection on this left shoulder. Okay, very strong rejection. Price to move most likely back to this zone, at least back to this zone, 1935 zone, 1935 to 1937, between 1935 and 1940 to be precise. Gold might correct back into that, and that is already happening. So what do I advise you to do in this case? Look for a move to 1 hour time frame at the close of this candle. All right, let me see if I can use feed to get this. This might be looking like a lot of things you have to put into consideration, my dear trader. All right, you can see Fibonacci retracement from this low to this high. Okay, just tapped into the 50 and started moving back up. So I might advise you to hold on to, and this looks like, again, here looks like it looks like a bullish, bullish hammer here. Sorry, bullish flag. A bullish flag. So a break of this zone I'm seeing some liquidity around here, around this area. So a break of this zone, and then you can see something forming. There's a morning star candlestick pattern forming here. 1, 2, and 3. So if this candle, this bullish candle, closes slightly above this one, or even close the way it is, one can take a trade. One can decide to, okay, you might want to consider some technical indicators. Maybe we should add one. Let's look at stochastics. All right. What's wrong with this button? It's not giving me. Sections. Okay, so let's this button. I don't know what's wrong with the indicator button. But you can just look for more confirmations, but you really need to be patient before you go ahead and buy. There is some level of liquidity zone here. So to be sure that market price not coming here to grab some liquidities to come downwards, okay? To be very, very sure, I may have to put we have to set up a buy stop, at least back to this high. Back to this high can give us up to 80 pips, right? Okay, 78 pips thereabouts. I can put a buy stop and then some pips lower this also area of liquidity. Okay, so you can see what's happening to that bullish candle. So you really have to experience some patience. Okay, if you may not catch it, you may just decide to set up the buy stop. Remember, price may just want to come back here and do a double top before it starts coming down. And we're picking this trade just from observing the US 10-year bond yield. Okay. All right. So markets might just do this return back here, and then before we start experiencing the move down. Okay. That may just be um, the outcome. Right? So in all these things are speculations, and until something comes out, how do you trade it? Really, something that you have confirmed over a period of time that's been consistently working, not necessarily 100%, maybe 7 or 8 out of 10 times that is completely applied. Remember, I said to you last time that um, before you take a trade, be sure that you have a lot of factors, confluence factors that support your your buyers, that support your buyers. So I want to see this candle finish for me. Then I may call this a morning star. Okay, a morning star, and then move up. Remember, you can see an engulfing, bullish engulfing candle here, and this should not be on this line, bullish engulfing candle. So this also is an indication that there is still some strong bullish, power on the gold. All right. So if I may decide to also use my fib levels from this low to this high to check where this can get to before it begins to come fine. Price has tapped into that my zone between 50 and 1.8%. It has tapped, so this is a confirmation that this retracement is already complete. But I can't jump in right here. I'm considering these levels of liquidity. Price may want to go there to grab some liquidity and come back all the way down. You can see it also to be a channel. Okay, it tested down here, also here, it has gone here. So there could be someone's expectation that price may want to test, they want to come back to this level, and then before it gets gather more strength to break and get to this level. All right, so that's why you have to be very careful and patient to be sure that market has decided. You have to allow the market to decide the direction it wants to go. Like to push all the way down here and now before it pushes up, and then coming down there might be completion of the this bearish correction that is happening overall from here. Okay, coming into this zone might not be it's between 50% and 1.8%. Like I said, I'm not going to buy gold until this level of liquidity is completely broken, and that could be around this area. Let's give it a little more. Okay, around the 1927, and then should be able to grab quite a whole lot here. Price breaking this zone, nothing stops it again from getting to this area. And this because when it gets to this point, it's going to come all the way down. Overall, on the higher time frame, we saw that gold is on a bearish direction, correction from the all-time high, resistance zone. So all these things happening on the short time frame. So if you have, or if you've been trading and analyzing the market on short time, maybe 1 hour. Remember why we came to 1 hour is just for us to look for entries. Okay. Assuming that it's here that you are looking, you don't have sufficient data to know the direction that the market is going to go. You don't have it. All right. So analyzing from a higher time frame, scaling down to lower time frame, to take trades is actually the right routine for you. I'll wait for this candle to finish forming. If I move back to my 4 hour, okay, there's a lot of this is looking messy here now. Let me remove this. So we're saying that price might go back down to test this area, which completes the 50 to 61.8 retracement tool and break, to the upside. Again, there's an identified area of liquidity that could be grabbed and the price moves down. But if this area is broken, there's some other blocks around this area, this highs, maybe market price has done this push, there's a double top here, this point, and rejected, it came down. Again, last Friday we saw this happen and it came, down. It has corrected, okay, to 61.8. So expecting it to move all the way back to the zone at least, okay, trying to obey this pattern that we saw here on the 4-hour time frame, the inverse head and shoulder. It might play out and get back to maybe breaking this level. We'll be expecting this other area of liquidity. Where the market wants to come here to grab some liquidity here. Okay. Here. Okay, so we're looking at these zones. So please, let's be careful. If this is valid, okay, if the neckline is broken, remember here is around the neckline here. If that neckline is broken, let me see what I can do here. So you can do some screenshots. Can do some screenshots. Okay. Okay, so this is what we are presuming. Head and shoulder. Sorry, inverse head and shoulder here might cause gold to correct back to all these zones. Okay, so my make gold to get back to this zone. That's about 1970, 1975, thereabouts, or this can happen. But before, remember, it's priced at the time, the market is timing, so we have to follow the footprints of the price, its next, where its next level would be. Okay, so you can also see this here. It is an ABC kind of wave. All right, so let's not stay here for too long. 1 hour time frame. So you should be able to wait on 1 hour time frame. Please wait this level here, some liquidity area here, and then around these points. So we have to wait until price decides what to do. If it breaks above it, then we're going to continue to buy. If it breaks below, it means price wants to complete its killer range correction around here. So come on, grab this and lows here, break it, come back, get back to this level, and then push back upwards. Okay, we'll continue to provide information, but if you want to place a buy stop pending order, you can use this guide and do that. So move to which other pair now? Let's go to Euro USD. There's something I see in Euro USD play out a lot of times, which I want to show you today. And we're also going to look at it on a 4-hour time frame. If you could put your chart on 4-hour time frame, Euro USD. It's just simple. Let me give you the background. Anytime we see an institutional candle form like this, it can be bullish, it can be bearish. All right, but in this scenario, let's look at bullish. view this kind. Okay. If you have an institutional bullish move, for instance, it can also be institutional bearish move, depending on which direction that the market is going to. We find this. Okay. So we're gonna do it for two. So this large, candle, this candle cannot just be mere correction or profit taking. This is the market makers, in play here. Large institutional candle followed by some short candles now. It can be bullish, bearish. Can just have, can also have a dodgy. I don't know if you are seeing this very clearly. And then you have another maybe bullish candle from here, short candles. Okay. Then you just try to count them. Maybe between 3, 4, and 5 short candles after this institutional bullish move here. I tell you what to do. You come here to pick a trade, right? At the close of the fourth candle, and when this 4 hours, and all these candles are just short, their pip value maybe about 15 pips, thereabouts, 15 pips, 10 to 15 pips, moves after this strong institutional candle, move. This is actually a sign. It's a sign of rejection of the continuation of the bullish move. Okay, this is what happens. You come here to take a trade. Immediately after this candle, the fourth short candle finishes forming. You can get as much as 50% of this move, or about 2/3 of it, and target 2/3 of it. Just come here about 5 to 10 pips above the high that's established here, and set as your stop loss. And set as a stop loss, then you can take good. Most times when it forms, is always in between 50 pips, thereabout. Just catch it and move. So in this case, this is a bearish action. So we're expecting the market here to, reverse, push back down by about 50 about 50 to 75% of the move. About 50 to 75% of the move. So you can push your Fibonacci retracement tool and get here. So this is 50%, which is exactly half of this candle around here. This place is 61.8. You can just be safe and put your TP on 61.8. Sometimes you can just get to 2/3 of this whole move. Okay, so then on this other side, you have made after the candle, this one forms. Of course, this would be a bullish candle, show you some kind of corrections. Another candle, This time the bears. Then another, maybe this time it give you a dodgy small pin bar. Small pin bar forming here. You're going to back test this. Going to back test it, and then you're seeing this. Remember, the last candle you're going to see form will be the same candle in the direction of the market. So right now, you can see here is red, okay? The bears, because they'll be the last person to finish this correction before market pushes down, and then here too. And it's also important you don't see, if you see candles that form very high, maybe something like this, okay, it makes it more difficult, makes it more difficult. As much as possible, locate it when this candle, this high is not too, the shadow is not very far. They're always very short candles. And this is what we expected to happen in the market. Price moved all the way from here down. So you're going to take a trade. Immediately after this candle finishes forming, you are taking a trade to at least 2/3 of this institutional candle before another thing could happen. If you have an idea of the direction of the market is going, if actually you are in a bullish trend and this happens, fine, that was so fantastic. Overall direction bullish, that is so fantastic. Sometimes might just get back to closer before any other kind of correction. So let's look at the chart now for euro. Let's use euro USD as a case study, which is actually what I'm seeing right here. Look at what's happening here. See an institutional candle from here, and there is a level of there's inefficiency here. There's inefficiency here. This candle here, okay, and this one. You can see this is, they need to come and close this inefficiency, or some people call it imbalance. All right, imbalance. So there's some kind of imbalance here that the market needs to come and close. Market needs to get here. Sometimes can just move a little bit and come back up. Okay, we are seeing 1, 2, 3, 4. All right, and we are looking at going all the way back. And if we're taking this trade, we'll be looking at, you can just use this as a test, not take it on your live account. All right, here, and you can trade it just down here, slightly below this. Sometimes it happens so quick. Sometimes there's some delay. Like I told you, these short candles can be up to 5, sometimes 4, and you see markets push all the way down to correct this move. Okay. Now let's do a back test. Let's do a back test. You can see this. You can see this. This is a very strong institutional candle. 1, 2, 3, 4. Right. See the fourth one. After the fourth one, you're taking your trade. See what the market did. So you could have taken your trade after this candle, and then maybe about 15 pips up. Target just 50% of the institutional candle, but you can see it just came all the way down. Came all the way down. All the way down. And these actually gave a lot of pips. This gave, if you are trading that candle, it gave you about 66 pips. All right, give you about 66 pips. Let's just go again and see. Sometimes sometimes it shows up and it doesn't work. Look at this institutional candle here. You can see it, followed by short candle. This one is three, just three of them. And look at what's happened. Price move, and this is on 4-hour time frame. On 4-hour time frame, you may consider this candle as well. You can see 1, 2, 3, 4, 5. All right, see how the market pushed down. Look at this one here. Okay, let's take this one first. This is a bullish institutional candle that finished forming 1, 2, 3, 4 candles. This one is now the fifth one. So some pips above. Look at what happened. You can see how far. Now this is the bearish institutional candle again. 1, 2, 3, 4, 5. Are you seeing? Between 3 and 5 short candles. Look at them. When this one finishes forming, you are buying. This time it gives you about two thirds of this whole move. 4-hour time frame only. 4-hour time frame only. Okay, look at here. This is an institutional candle here. Look at 1, 2, 3, 4, 5. Okay, if you took this trade expecting to come down, all right, you can see here it did not work. It didn't work here. Okay, it didn't work here. And look at here. 1, 2, 3 candles, it pushed all the way down. All the way down. Look at this very long candle, institutional candle. 1, 2, 3. You can see 1, 2, 3 price moved, just giving you 50% of this move. Look at this one. 1, 2, 3. Price moved full time. It gave us full profits on it. Okay, look at this here. Strong institutional candle followed by short candles. 1, 2, 3, 4, 5. Look at price can retrace back. Okay, you can also use this to get this move. So whenever there is shrinking of candles after a very strong either bullish or bearish institutional candles on 4 minutes time frame, please just look for those candles, shrinking candles, and take a trade. Look at this. Look at this. This is so fantastic. 1, 2, 3, 4. You can see it. Price moved all the way down. And I say you have an advantage if you already know the market direction, if you have the trend, so you can trade only the ones that present themselves in the direction of the trend, within the same direction of the trend. All right, so we're going to look at this. This might provide us with a trade today. It might get all the way back down here, looking at DSY. Okay, this was nice on DSY. Okay, the DSY makes this correction back into the zone. It's still pushing. Makes correction back into the zone. All right, it's already overall bearish. If it makes correction back to the zone, we will expect the Euro USD to sell. We expect Euro USD to sell. All right, and of course have a lot of imbalance on this candle, which is what we're expecting to come back. Market have to come back here to fill that imbalance and then decide on what next to do. Right. This is a true indication that price may not overall go back up. A break of this low, one can decide to take a trade on Euro USD. Let's go to the Dragon. It's already one time is fast spent. Let's go to GBP JPY. The Dragon is already doing what he alone does best. This is the pair I wanted to, you can see. I actually wanted to show you guys this one first. But we started with gold. The Dragon is really making a whole lot. I took this trade, I took a sell on it. You could see I actually saw this when I saw this, before this stuff commenced. And I want to take some partial profits from that move. I expected that to happen. I expected it to happen. and we might have more. This is 4 hour time frame for the dragon. I saw this. There are some, I always provide you with, I always provide you with some, provide you with some fundamental perspective on every trade before we start trading. And if there is a change on any of those directions, then we'll be able to know. If you can see, the Bank of Japan has refused for a very long time to hike their interest rates in spite biting inflation. And their reason is they want to make the yen cheap to attract investment into the economy. That suits them best. But the yen has been performing woefully against many currencies. Performing woefully against many currencies. But looking at the technicals, this guy likes doing a lot of structure. You can see a high here, developed here, came back here into a low, gave us this doji. We made a call after this doji to buy. Price hit a high and is doing a rounding top. It's doing a rounding top. I sent this out to someone. So look at this. This is a rounding top coming here, and we are hearing some speculations of interventions. Of course, there have been some good data, economic data coming out from Japan, and there are also some speculations of an intervention on the currency, and it could be that sentiment that is driving this guy crazy. See the yen right now, I think between Friday and today, has been strengthened across the board. Any yen pair, USD JPY is going down, AUD JPY is going down, and this is the reason. There are some speculations of intervention. So until the next cycle of the interest rates, I will need to check the calendar to know when that will happen. But look, this is a high here, and here is a low. That has broken, and price retested it a lot of times, made a fresh high, went back to this same previous high. In a confluence, it pushed it back to the same level, and it has been dancing around there, got here back into this place. And I actually put this arrow here. A break of this zone, nothing stops us from retesting this zone. A break from this zone, nothing will stop us from going all the way down to that zone. So I wish I had done this earlier before we started. This had not happened, this breakout. Okay, so we're going to wait this 4 hour time frame. We're going to wait for this candle to finish forming. If this candle finishes forming, you might just decide to do a sell limit halfway. You might decide to do a sell limit halfway here, and then let your stop be above this zone. You might do a sell limit back to this, or anytime there's a pullback, it can come here, or you can just come back here to set up a sell stop. So half of this whole move, okay, can be somewhere here. Expect price to break into this. So half of it, that'll be around can use 181.90 as a sell limit. Okay, expecting that the price will definitely pull back. This is a strong move. Price will definitely pull back into this zone, or it can go back to retest this previous level of support and now begin to come down here. So you can't say, oh, I've seen this low has been, this support has been broken, and then let me jump in. Or you can't just jump in that way. It's either half of this candle which around this zone, so it could be a retest of this place, giving it a resistance status, and then price can now push down to this level, and you're going to have how much? A lot to get there. If you're moving from here all the way to this place, oh boy, this is about 182 pips. Very huge opportunity that we're expecting here. And if you can look at other JPY pairs, you can look at them and get more trading opportunities there. Wanting to do sell limit at this zone, or you come about 15 pips below this low, somewhere here, maybe 15 pips somewhere here, and put your sell stop. This sell limit, sell limit, and sell stop. So sell limit maybe around this area. Retest of this zone can give you a retest of this zone can give you an opportunity to trade. All right, and then when that happens, of course, if you have set this, means you won't have a very fair price. You won't have a very cheap price. The cheapest price will come around this point. Can come around this point. But if you think that the tempo, the momentum could be so high that this expected correction may not happen, all right, before the downward, the bearish action continues, okay, you can decide to put it. So what do you do? Move your time frame to lower time frame, okay, where you can see more of the corrections, all right. So price may correct back into the zone before coming down here. On this 1 hour time frame, there is a very significant candle. This is an institutional candle that broke this very stubborn zone for a very long time now. Price has been engaging on that level. It's broken it, expected to do some retests before the corrections may begin. At this point, I would like to call for questions. If you have questions, please, I would like to get your questions. Please, what pair is this? All right. The current pair we are doing is GBP JPY. GBP JPY is the current pair that we are actually doing. What's the great insight of these weak markets? Giving much appearance. All right, thanks, Onyemachi. All right. If you have questions, you can send in now. The current pair is GBP JPY. Right, JPY. So if you have any questions, you can come to our live chat, or you can go to the community. And if you enjoy this content that I brought to you today, please like it to share with your friends. Click that like button and then subscribe to this channel so that you'll be the first to be notified when next we have a live analysis and trading section. And you can follow us on Instagram, you can follow us on TikTok, and of course on Threads. All right, and also on Twitter, iThrive FS at iThrive FS. You can follow us there to get quality content that can enable you to have an edge while you are trading the markets. Thank you so much for joining this live section. We'll see you again on Wednesday, same time. So do have a very wonderful rest of the day.